The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments in your retirement here on the Max Out Savings Show. Our motto and our philosophy is to save aggressively and invest conservatively. That's save aggressively and then conservatively invest the funds. That is the key to building up wealth over the long term. And that's what we talk about on the show. We always start the show on that. Discussing really importance of putting away money for retirement and then conservatively investing it. Now, during the show, we might talk about retirement, we talk savings, we might talk about the world today. The world is changing so rapidly. We want you to keep you up to date and understand what's going on. We want to bring you stuff how we see the world and not how we don't have an agenda. We try to really analyze where things are going and how that we can protect and deal with in retirement. We got a lot to talk about on the show today, and want to just start out a couple things. Look, what President Trump was elected to. If you look at the United States of America, and I think you got to pull back a little bit. What do you do in this market here? The S&P 500 is down 10% year to date. This is the fifth worst start in history for the S&P 500. It's not doing well. It had 2 good years. We're dealing with tariff issues. We're dealing with inflation issues. We're dealing with lower dollar issues. We're dealing with out of control spending issues. And what do? We're halfway through the 2025 fiscal year, and our deficits are running at over $2 trillion, $2.4 trillion rate. It's about 9% of GDP. This is catastrophic in a fair economy. It's just in a normal economy with reasonably unemployment's around 4%. Things aren't that bad out there. And yet we have a government that the spending is out of control. Joe Biden poured everything, including the kitchen sink, into spending to get these guys reelected. He threw money, to quote one of his people, it was like throwing gold bars off the Titanic. And spending was absolutely out of control. And so here we are today. President Trump is reelected. He's reelected because of out-of-control spending. He's reelected because immigration, basically under Joe Biden, they basically mandated there's not going to be borders in the United States of America. Anybody can come across, and unless you're Joseph Mengele or Osama bin Laden, you're going to get in the country. If you're just some small level terrorist that might blow up a few things, you get in and you get to work in the United States, which effectively they eliminated borders. This was the dream of George Soros's open society where we had no borders. And so the plan was to flood the United States with immigrants from all over the world and basically, effectively destroy the United States. We had an education system that we pour more money in than any other country in the world, that we produce the brightest scientists, the most innovative people in the world, but at the same time, we have over half the population which has difficulty reading and writing and doing basic things that I saw a report card from I think the 1920s, and from I think it's my wife's grandmother, and it was like reading, writing, history, rhetoric. It was just it was the basics, and we've gone away from the basics. We've gone into all types of just other things. We've gone into everybody gets a trophy world, and they're not learning. Look, it's no fun to sit there and learn reading and writing or math or whatever. Everyone had some part of their in their school. They weren't that good. Maybe they weren't good at math. Maybe they weren't good at reading. Maybe they weren't good at writing. There was always something, and it wasn't any fun, but you had to do it. And you wanted to develop citizens in the future that could do a job. Okay, we had a failure in healthcare. Our healthcare costs were the highest in the world by a huge margin, and yet our standard of living was declining. We were like number 10 in of the industrialized countries. We had people dying sooner than almost all the other developed countries in the world. Yet we're spending twice as much money on them. So one thing, and there's a common denominator to all this stuff. It's where the federal government is involved. The federal government was failing at every level. They were giving out money. They gave out Stacey Abrams $2 billion to give away energy efficient appliances. She had no experience, didn't know what she was doing, had no plan, had nothing, and they just said, here's $2 billion to an NGO that we had no control over. Everything was failing at the federal government. The top 7 counties, 6 or 7 counties or zip codes in the United States, wealthiest, were in Washington, D.C. Everyone I talked to goes, well, you would think that'd be in L.A. or San Francisco or New York City or, Dallas. You said, no, it was there. It never dawned on any of us, wait a minute, I think we all thought it, but no one really thought, how much money are these people really making up there? And evidently it was an enormous amount of money. But we were dealing with a situation where the federal government was failing at every level. They were failing our older people. They were failing our children in education. They were failing on health. They were failing on controlling the borders. They were failing the basic of any government would be. So Donald Trump is elected. He's elected by the majority of the states. He's elected on the electoral basis. He's elected on the popular vote. He has a mandate to clean this mess up there. And so here we are today. We're dealing with these very tough issues. We have the DOGE Commission to work on cutting spending. We're putting in tariffs in place to try to bring back manufacturing, and at the same time bring more income into the country to reduce our deficit, to control our spending, and to cut interest rates. He's restructuring the government. He's pushing departments to move their people out into the other parts of the country, so they're not just in Washington D.C. in this little group think. And it reached the point in the United States where basically everything west of Washington D.C. to San Francisco was flyover country with the rubes living there, and you had this blessed elite class up there that was going to make everybody's decisions on how to live their lives. They were going to make all the money, and they were going to get rich, and they had a serfdom in the rest of the country. That's come to an end, and Donald Trump is changing things. But I think there's something important you want to understand. People aren't happy about this, and that's what we're dealing with. And now that they're all upset. Let's take a look at China. China has been very successful over the last 30 or 40 years building their country. Why is that? Because China thinks 50 years in the future. They're not always right. They're not really smart, but they think long term, and that's a huge advantage. You can put programs in place. You can develop things out for the long term. And if you look at the United States, Wall Street is in a state of panic because the stock market's going down. They want to eliminate all the tariffs and go back and continue to ship, and move all the factories out of the United States because they're thinking short term. No country survives thinking short term. This is the most powerful, the most successful country in the world for the last 125 years minimum. No one has come close to us. No one, you can say it on any level you look at, virtually every single major scientific development, from the telephone to the computer to the automobile to the electric car to the space program to putting a man on the moon. You could just go on and on and on. Comes out of the United States of America, And so here we are, the greatest country in the world, and we've let it degenerate into a disaster in our government. Everywhere else we've restructured, we've made things more efficient, we've made things better, except the U.S. government, because there was so many people making money there that we had to. That's changing now. We're undergoing a restructuring of the United States government. That's not going to be easy. You're hearing people complain. You listen to many people in Washington and Democrats and people making money. They're hoping Trump fails. They're hoping it goes back to normal. They want China to succeed, not because they like China, because they hate Trump and he's threatening their way of life. This has to change for the better of the United States. But these are big changes, and we're going to talk about what's going to happen here with this after this quick break right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400, or visit maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement. This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings investments in your retirement. I want to mention one of our sponsors, Rangoni Alto Gin. It's one of the finest botanical gins in the world. All natural, organic botanicals out of the Italian Alps with the spring water, and they put together an incredible drink. It's very popular, and it's taking off here in the United States. Anyone that's tried this just loves the drink. It's phenomenal. It's got a little lower alcohol content. It's got better drink. It's got botanicals in it, and it's got a phenomenal flavor profile. And one of the reasons it does is because they've been doing this for thousands of years up in the Alps, and they brought the product and they bottled the product and brought it to the United States. So if you get a chance, it's Rangoni Alto Gin. Look for the kingfisher bird on the label. Now then, so here we are. President Trump is restructuring the country. As we talked about, the Chinese, they think 50, 100 years in the future. And they have big issues there. Their economy, quite frankly, is like ours in the 1980s, where they have a real estate bust, and they're having to deal with that. They have factories that have been pumping out huge amounts of products. The tariffs are going to come in place, and this is going to cause problems around the world. But what I want you to understand is, this is a restructuring of the United States of America. We're on the wrong track. Everybody knows we're on the wrong track, and it's hard. We're dealing with two things. We're dealing with a lot of horrible policies that have been put in place, quite frankly, by both political parties. There have been short-term policies or policies that have been very beneficial to small groups of people, immensely profitable, that have not been in the best interest of the United States of America. Now, we want to change that. We want to start thinking longer term like China. We need to think about our future. Instead of encouraging, thousands and thousands of apartments being built up. If you look at Houston, every major city, they're putting up so many apartments. Our cities are going to be like Paris, where you've got these rings of apartments around them in the suburbs that basically decay down, and then the only place you can actually they're going to hold up are the inner cities because of they're flooding with apartments. That's not what we want. We have corporate America buying houses. That's not in the long-term interest of the United States of America. We want ownership of homes. You drive through a neighborhood where there's home ownership, and it's completely different from driving through a neighborhood where everybody's renting apartments. Maybe people, they don't take care of it. When you give people property, they take care of it. That's the magic of the United States of America. And Europe wasn't a horrible place, but the problem is they were all serfs, and out there they didn't own any land, they didn't own anything, and so people go, I don't own anything. I have no future. I'm going to the United States because I want to own something. For all the talk of the immigrants, these aren't bad people. The problem with the immigrants, honestly, is Joe Biden let anybody in the country, because they wanted to wreck the country. But most of the immigrants are good people. They want to own something. Why are we having policies in the United States encouraging Wall Street to control our housing side? These aren't good long-term policies. These are not in the best interest of the United States of America. Hey, does it help out BlackRock and Larry Fink? Absolutely, but Larry Fink is an enemy of the United States, period. He is a globalist. He basically follows the orders of Klaus Schwab in this Davos crowd, which has done everything they can to, destroy the oil industry, destroy the cattle industry. They want to reduce the population. I can't even believe I'm saying this because I sound like, some conspiracy theorist, but this is in their writings, and this is what they want to do. Larry Fink penned a letter that he was going to defund the oil and gas sector. We wrote about this 2 or 3 years ago. The only thing I regret in it is not erecting a billboard on I-45 as soon as I read it like I wanted to do. It was an outrageous statement. It was a breach of his fiduciary duty at BlackRock, but they don't care. So But we need to get rid of these people. We need to improve the United States, and we need to have an ownership society. We need to have a group of long-term society. We need to lower our debt. So these are all big issues. So this is a restructuring of the United States of America. Now, Ted, why am I listening to this today? Okay. The reason why is this is a show about retirement. This is long-term. Retirement is long-term. You retire, you're looking at 20, 25, 30 years. Back in the 1940s, if you retired at like 65, pretty much you were going to be gone by 75. I mean, that's just the way it was. So it was like, I just need a little money for 10 years and I'll be gone, and boom. People are living into their 90s now. And so you have to think long term. And so it's an advantage to retirees for the United States of America to think long term, because those retirees depend on their assets, which we want them to appreciate long term. And they need a strong government to pay their medical for Medicare and pay their Social Security benefits. And so we have this huge battle in the United States versus the people, the short term people. So what are the big changes from this? And I want to hit on a couple of these things here. Look, as we said, this is a restructuring of the United States. This is not deglobalization, but this is kind of a fair globalization is what we're trying to do, and so it's a little different. It's a different structure. It's going to have different outcomes. Yeah, the other day on a show last week, we talked about Apple. And how Apple had these massive margins, and 42%, I think, and we compared them to like Dell and Lenovo and Hewlett Packard. Their margins were like 25%, and their gross margins. And it's like this with a lot of companies. And what these companies did is they moved all their production overseas. They said, hey, look, we can cut our production 50%. And our cost 50%. So we'll close the factory, we'll move it overseas, we'll cut the price of the product 10%. We get to keep the other 40%, and our margins go up. The margins in the S&P 500 are at record levels. That's coming to an end. Okay, Apple. Hey, Apple, we can't build the product. We can't build iPhones in the United States. Well, maybe you don't need 42% margins. Maybe you should get more normalized margins like most people out there and move your factories back to the United States. I get it's good for you guys. I mean, maybe you can sit there and make a deal in some slave camp somewhere and pay 25 cents this year, and you can make even more. 25 cents an hour, you can make even more money. But what you have to understand, this big trend we're talking about, this restructuring of the United States, this deglobalization, these putting tariffs in place, they're going to reduce the margins of corporate America. And so if you look at globalization was good because it cheap labor. We had supply chains. You could move your supply chains anywhere in the world, and ultimately they decided instead of having a bunch of that, they'd have just one or two in the lowest cost places. They could outsource anywhere in the world to increase their margins. That's coming to an end. And so these margins are having to come down. In deglobalization, your input costs are going to rise. The places you can produce are going to be limited because the tariffs are going to come into place. Donald Trump doesn't want Donald Trump doesn't want everything made in the United States, but he wants a big enough proportion of the United States so we have factories in the United States. Now, that does two things. That creates jobs for American people. In the event of a war, a pandemic, or whatever, we have production capacity in the United States to support the economy if the other capacity is cut off. And so it's a national defense issue as well. So the big theme of the last 20, 25 years since China came into World Trade Organization has been globalization, cheap labor, global supply chains, closing down factories, increasing margins, reducing your cost. That's now coming to an end. So this is a world of basically deglobalization. Deglobalization is inflationary. Globalization is deflationary because you're reducing the cost of your factories, and you cut the price some and you increase your margins. You kind of split the difference, so to speak. So the prices come down. Well, now that you have to move the factories back to the U.S., it's going to be more expensive. So the price of the products is going to go up, but the margins are going to go down as well because people can't pay the prices and the companies have to eat the margin. One of the more fascinating things about the big inflation we had after COVID was that corporate margins kept rising. You never see rising margins in inflation. What that means is companies are very aggressively raising prices more than the inflation to boost their margins and claiming it's the inflation's causing the problem. So the big during globalization, you wanted to be long big multinational companies. You want to be long emerging markets. You had low volatility because anytime there was a problem, the Fed and the whole global world would go in and flood the system with money, and the problem would go away, and you always buy the dip because they're always printing money and everyone's getting along and it's always working. In a tariff world, in a deglobalization world, okay, when the factories are coming back to the U.S., your margins are going to get squeezed. Your supply chains are going to be limited. Look, I can't produce everything overseas. I got to bring some back, or the government's going to be all over me. Okay, your inflation costs are going to go up. Volatility is going up. Look, if there's a big problem in our financial system, the market, do you think China's going to come try to help us out, or Europe? They've been trash talking all over the place. The Germans and the French. And the Canadians, they're the worst. Oh my God! The Chinese are more friendly to us, but so your volatility is going to go up. This is why we've seen these big swings in the market because the volatility is going up. This is why interest rates have gone up to some extent. This is why, if you look at the yield curve, the yield curve kind of bottomed where on the longer end where rates were low. It was right around election time. Since then, interest rates have been going up. So the dollar is going down. So all of these things are in place. So what do you do? What do you do in this market? The world has changed. Donald Trump has a mandate. Donald Trump's thinking long term. Donald Trump is restructuring the United States. Donald Trump, well, he might not do it. But then you look and go, whoa, Donald Trump has the best cabinet that's been put in place since FDR. And he came in during a depression. Trump came in during basically a depression in manufacturing in the U.S. for jobs. And so that's a restructuring thing. These are very smart people. I mean, a typical cabinet, if you look at the typical cabinet, let's say you take the top 10 cabinet members, defense, energy, health and human services, EPA, you just go down the list. There's 2 or 3 really smart people. There's a bunch of political appointees, and a few other people are in there for whatever reason because they supported the campaign. You look at this group of people, you take the top 25 people, and of those, there's probably 20 of them that are brilliant, incredibly accomplished people. And so these people get things done. And so they're going to get stuff done. And so this trend is happening. This restructuring is happening. The end of globalization is happening. And so what do you do in that environment? So what you want to look at companies that have pricing power. And so you go more domestic companies. You say, oh, this is great. I'll go buy PepsiCo. But then, Jim Cramer made the comment, I was listening to him, he goes, Pepsi's got to cut prices. They raised the price of their little bag of potato chips like 62% since the pandemic. And I think somehow he had a number of theirs, instead of 14 chips, there's now 9 chips in it. But they got to cut. So they don't have pricing power because, again, it's another one of these companies that have been aggressively raising prices to boost their margin. They cut costs as much as they can. They can't do it. So you have to find companies that haven't been aggressively raising prices, that have a pretty good cost structure that can control their input costs. So they have pricing power. And you have to look at domestic manufacturers, because they're going to do pretty good. There's going to be a lot of demand for domestic parts of domestic products. They have an advantage. If there's just a minimum 10% tariff, it helps them out. The companies are all being pressured to buy American, so this helps out. They can control their cost. They don't have to deal with tariffs. If you look at defense and aerospace, this is another one. I'm not sure it's quite yet there for them, because I do think the DOGE Commission is going to go after the defense industry. I mean, there's an incredible amount of waste there that's got to be cleaned up, and that's. But I think that's one, because it's countries are going to be buying planes, defense armaments, because they can boost their trade with the United States, make their trade deficits look better, and that's going to be a positive. Commodities and miners. Again, there's going to be big demand for these out there. And commodities are more fungible across different asset classes and less likely to be tariffed in the end, and because they can sort of go to whatever place. Utilities, infrastructure in the United States. We need to build our infrastructure. If you talk to anybody, if you talk to any European, you talk to anybody from Japan, Singapore, China, Taiwan, anywhere they go, you guys have the worst infrastructure. And it's just, so you're going to see those type of things. Those are the plays that are going to work. Technology is, some of the losers. Well, I'll tell you what, we're coming up here in a quick break. Yeah, I'm going to cover those in a minute. But so understand, the companies of the last 25 years aren't the ones that are going to work. The big tech companies, the multinationals, emerging markets where they could just, go in and set up factories all over the place in those countries and ship the product into the United States tariff-free. That's kind of come to an end. So if it's an emerging market that deals with a commodity like a copper or something, oil, that's one thing. But if it's a country that's all manufacturing, that's going to be another thing. And so those countries aren't going to do as well. So the winners of the last 25 years, multinationals, big tech companies, emerging market, buy the dip, all those type of things, that's come to an end. It's a different world out there. You want to have domestic manufacturers. You want to have domestic companies. You want to have companies with pricing power. We'll be back right after this quick break right here in the Max Out Savings Show. Again, we're working to show you the world that's changing and the opportunities right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-672-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now at maxoutsavings.com.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking about this big change, this restructuring of the United States, the deglobalization, and it's going to change the trends of the investment world. It's going to change the trends of your retirement. And so the winners of the past aren't going to be the winners this time. Some of the ones that are going to be hurt by this really are going to be, as we said, the big multinationals that are basically boosting their margins by shipping everything overseas. They're going to be hurt. Global retailers that have a lot of imports, they're going to be hurt. It's going to hurt them. They're going to have to squeeze to get margins. They're going to try to force the companies not to raise prices. They're going to try to keep. They're going to get their margins squeezed too because people can't afford all these pricings. We've had 3 or 4 years of inflation. It's really digging into the lower 50% of the economy. I mean, Treasury Secretary Bessett's remark about the top 10% are spending 50% of the consumer spending is remarkable. These people aren't hurt, but a lot of people are really struggling out there, and so this I think is going to hurt them. High debt companies, because interest rates, money's going to get somewhat tighter. The interest rates on the long end are already going up, and the economy could slow in this thing. There's a lot of uncertainty. tech firms, they're going to have margin issues. If they, a lot of these tech firms have very big margins. The Europeans, they're going to be looking to sit there and balance out their trade. But a lot, quite frankly, a lot of the tech firms have been kind of riding, hey, if you come in, if we let us do business over here, you're not going to have to worry about tariffs. Well, now the tariffs are going to come in. The companies are going to look a lot harder at tech companies. Do they have monopolies? So you're already seeing, there's already monopoly a trial at Facebook. With Mark Zuckerberg was saying, and there's a trial for Google right now. I remember talking to a friend of mine. We had a long discussion. He was in charge of the antitrust for one of the big tech companies. This was years ago. They were very confident they could beat anything the government throws at them. And now they're really under the gun. The same thing is going to happen in Europe and elsewhere. So tech is one sector, again, with very high margins that kind of across the board, in many cases, oligopoly, or most of them really have close to monopoly pricing power, and they've been using it. So that's another sector. Tech has been the biggest winner for the last decade. That's kind of coming to an end. Emerging markets, that's another area. But the companies, again, that have the pricing power, that have manufacturing in the U.S., they're going to do well. That their products are reasonably well priced. I mentioned Pepsi, but if you look at Coke and Pepsi, if you just look at the Pepsi or the Coke, the Pepsi side of Pepsi, it's pretty reasonably priced. They probably have a little more margin power on the soft drink side than they do on the chip side. So Coke would be a little better one. Precious metals. In a world where there's tariffs going up, there's dislocations around the world. This is good for us, but it's not good for the Europeans. It's not good for the Chinese. They're going to print more money. They don't trust the dollar. They're looking to gold. They're looking to silver. Those type of things. They're going to be buying commodities like copper. The electrification of the world through copper. Countries are going to let copper in because they need the copper for the electric cars. They need the copper for the AI. Those data process. Some of these big data centers, these data processing centers that they're building out for AI. You know what the cost of those are? Think about what the cost would be for one of those. Some of them are $50 billion a piece. It requires a lot of copper in those things, a lot of other metals too. But so those things are going to profit. So again, it's a changing world. It's a restructuring of the United States. There's a lot of people hurt by this. There's a lot of countries hurt by this. They're all fighting back. There's a lot of people in the U.S. want to keep it. Why can't we just continue to think short term? Why should we think long term in the United States? Things will be more efficient if nobody owns a house and BlackRock's running everybody's neighborhood. Well, that might be the case, but then we lose ownership, and that's not in the best interest of the United States of America. You can see I don't like Larry Fink, but I don't like the globalists. They have an anti-human agenda that's not in the best interest of the American people on numerous levels, and they've infiltrated the country with their people, and we need to kind of remove them. But it's another story. But so what we're dealing with is a different world. So in that world, you want to have higher levels of cash. You want optionality. What did we say? Volatility is going to go up. Just the buying the dip all the time is not going to work. It's not going to be a straight-up market. Everybody doesn't want everything to work well. If we have problems in the United States, China and Europe are thrilled by it. So that's going to be much more volatility. So you want to have that cash so when these crises come, you can deploy the cash. You're sitting in the cash in your money market making maybe 4%. That's not a bad deal with no risk. And then when an opportunity comes up and something falls 50%, you can buy it. So you want to spread your risk out. There's a lot of in this world, what do we say? There's more volatility. There's more uncertainty. No one's sure exactly what the tariffs are. No one's sure how strong the Chinese economy. We're not sure how they're going to react. And so likely we're going to see some economic slowdown here near term. People talk a lot about Donald Trump. Is he doing this? He's wrecking everything. He's doing too quickly. He has to. He's got to get this stuff all in place before the next election, so people can see the positive things. They can see the economy starting to grow. They can see the factories come back here. They can see the results. Okay, let's take a quick call from Larry, actually. Larry, the Max Out Savings Show.
Well, hi, Ted, and happy Easter.
Yes, happy Easter. Christ is risen tomorrow.
Very good. So I have a quickie observation for those of us who are old enough to remember. One of the big drivers for companies moving offshore was the cost of American labor, especially with organized labor. I remember back in the 70s and going back even to the 60s, it seemed like they were always going on strike. They're always pushing for more and more. And finally, companies said, I can do this cheaper offshore. And that's one of the reasons we're in the situation we're in today. If we start to onshore these industries, will we see a repeat of that?
Yeah, the situation with a lot of the labor unions is these guys make a lot of money, and they've got very good benefits now, and so they're mostly trying to hold on their jobs and grow their jobs. It's not as when they're a lot of their workers are making $100,000 a year, particularly in a good economy. Get overtime and stuff, and it's hard to sit there and push that point too much. I think the other thing to remember is, look, if you look into the future, remember China long-term versus the U.S. short-term. If you look long-term in the future, 25, everything's going to be built by robotic factories. So the labor costs aren't going to be as big a deal. So they might lose some workers in those labor when they change the factories to robotics. But if you can bring $500 billion or $1 trillion worth of factories back and they're more robotic, it creates more jobs and it spreads those union jobs throughout the economy into that's the real ultimate goal here. The question is 25 or 30 years from now when maybe we can produce so much, we can build society and build our whole standard of living up and stuff that the jobs are here, not the robotic factories are all overseas. It's kind of two answers to that.
The other key is right to work states like Texas made out pretty well, right? Because you didn't have to have a union down here. That was another reason that much of the Midwest got hollowed out was, it's just too expensive to do business there.
Yeah, no, I think that's true, and I think the unions have kind of realized that, and I mean, if you notice, there hasn't been a whole lot of issues with the unions. I mean, the unions have really kind of cut back because these guys are so highly paid. They just have to be careful. I mean, if you go back and look at ancient, the guilds and stuff really came out of the Masons and stuff. That was really they had different guilds that were actually electricians. They were basically stonemasons or woodworking people or different things, and I think you're going to see that. But I think the opportunities are so big, the unions are less of a problem. And the unions are realize it doesn't do us any good if all the factories leave.
That is true. Okay, well, you have a good weekend, and nice talking to you.
Thank you, Larry. Good point here with that. I mean, they've been they're very supportive of President Trump bringing these factories back and things. And so, because even if it is a more robotic factory, there's still going to be some unions in it, and I think that's what we're looking at in this world today. So the let me see something here. Oh, we had a question come in on the text about Fort Knox and the gold. That's an interesting point. They're still not talking about Fort Knox. I'm not. What I believe in Fort Knox is I think they've lent a lot of that gold out, and I think they're trying to get it back in now. And I think this is one of the things that's pushing up gold prices because there's been an enormous amount of gold moving from the London gold storage to the COMEX and then going out into the U.S. And I think it's going back into Fort Knox. That's just my guess on that. A couple things that we mentioned gold. I looked at some numbers. Nixon took took the United States off the gold standard in 1971, and gold basically moved from about $40 to $200 by 75. That was a five-time move, and then then it went from 200 to 80. So it went up almost 20 times in about 9 years. And I think this is very similar. This de-dollarization to some extent in the reascension of gold coming back into the financial system is kind of the same type of thing. And so I think gold can move higher. It's had such a big run, you would think it would have some type of pullback in here. But I think a couple thoughts. I think silver's a better buy in here. Silver I haven't broken out yet. There's the derivatives on silver. There's about 375 ounces of derivatives in the paper market versus every ounce of silver. And so if that thing ever starts blowing up, you're going to see silver just explode higher. And it typically moves higher than gold. Gold right now is up about 23.5% year to date. Silver's up less than that. I've got 10%. I don't think that number's right. I think I'm missing a number there, but it's lagging gold to some extent, and I think it tends to go higher. I think the mining stocks are going to have very good numbers in the precious metals, the gold and the silver stocks coming up because of just much higher prices, particularly in the gold. So I think that's an interesting area here. So we're coming near the end of the show. A couple things. We're writing our Max Out Savings Report. I said that last week. We're still working on it, discussing some of these big trend issues. The Max Out Savings Report is all about ideas, thinking, retirement, what to do in the world. It's a completely free report. We send it out once a month. That's all we do. We don't call you up or anything. Just go to our website, maxoutsavings.com. That's maxoutsavings.com, and you can sign up for a free appointment. For the free newsletter. If you'd like an appointment, I will sit down with you and we'll show you how to manage funds in this new changing environment, how we're doing it. We've done quite well year to date, and knock on wood, but I'll be happy to show you what we're doing. We'll take a look at your financial situation as well. And so if you'd like to schedule an appointment, we're here in Houston, Texas. Just go to our website, maxoutsavings.com, and request a free appointment. But at a minimum, sign up for the free newsletter. We write a lot. We really try to get big issues, and we try to get ahead of where everybody else is in the world to bring you stuff that you're not hearing about elsewhere. So those are a couple things. As we said, this is a big restructuring happening. President Trump is trying to think longer term, like the Chinese, 50 years in the future, 20 years in the future. There's a lot of pushback. He's got a very good team in place, but the volatility is going to increase. These markets, I don't think we've seen a bottom yet. We haven't done a lot of buying in here, which typically near bottom. I look around, I'm like, I need this, I need that type of. I don't have that feeling in here yet. You still want to continue to have a very diversified, conservative portfolio with less risk, with cash spread out against different asset classes with multiple outcomes. We're pretty good at trying to figure out an outcome. This one is really complicated, and there's wild cards like, what if China does this? What if Russia does that? What if this happens here? And so you need a more broadly diversified investment portfolio. Anyway, I hope everyone has a great weekend. It's Easter coming up tomorrow, and in Christ is risen tomorrow. Glory to God, and I hope everybody has a fantastic weekend. And we'll see you next week right here on the Max Out Savings Show.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.